What's up, YouTube? Welcome back to another episode of KJ the Investor. This is yours truly, KJ, and without further ado, let's go ahead and hop into the portfolio. Right now, y'all, the market is closed, and it's on a Sunday. Right now, the investing account is sitting at $63,260.97. Buying power, we have $787.06. And the reason we went down just a hair in buying power is because you guys know that we dollar cost average into Walmart every week or every 2 weeks. We try to get some of this. Walmart sitting at $94.77 as a close of business on Friday. I got 110.98 shares of Walmart. Market value is $10,517.63. Average cost is $57.92. We're up. At the close of business, we were up total of $106 for that day. But total return, we're now at $4,089.66, which is 63.62% increase. Walmart has been having a monster year last year and looks like it's continuing into 2025 this year. This has been the first month of the year. And right now, if we look at the month to date, we're already up in this position 2.41%. That's amazing for a value stock. You guys got to remember, you got to realize that Walmart is not a growth stock, it's a value stock, but it's growing at a rapid rate. Like, these numbers are just incredible for a value stock. So something to consider. I'm not telling you, I'm not telling you go buy all the Walmart shares and things like that. But all I'm saying is long-term investing beats trying to time the market. Long-term investing beats trying to get in at the dip and then just buy the dips only. I dollar cost average into this position. If the market is high, low, or sideways, it doesn't matter, because I know that I'm in this thing for the long term. Because look at this. Look at the total return. Almost 64%. Guys, this is a great stock to be into for the long term. And it's also going to be one of the ones that helped me get to financial freedom once and for all. So, I'm not, like I said, I look for those companies that's been around, and I look for those companies that's going to be around. And Walmart surely fits the bill for me. The next stock or ETF I want like to show you is my SPLG, S&P 500. Right now, it's at $71.51. Yeah, of course, it took like a little dip at the end of the trading day, but it's okay. I got 208.57 shares at SPLG. Market value is $14,914.98. Average cost is $63.59. And total return overall is $1,652.43. I'm up 12.46% in this position. Another banger, another big boy in my portfolio. This is my S&P 500 ETF, SPLG. It's my foundational ETF. So what that means is if all else fails or if all else goes wrong, I will at least have this as the foundation. This would be like, this was the first ETF that I started building up in my portfolio, because it's the it's at least excuse me, it's at least will give me the return of the market. SPLG a lot of times can be comparable to VU or SPY or any other ETFs for the S&P 500. It's just a cheaper version of it, and so I can get more shares for my dollars as I continue to grow my portfolio. The next ETF I like to talk about is LTEC, which is my Fidelity Missile Information Technology ETF. It's closed at $191.47. Even in the aftermarket, it looks like it's been getting bought. So I got 10.79 shares of LTEC. Market value is $2,066.27. Average cost is $169.96. And overall total, I'm up $232.18 in this position, or a 12.66% return. Guys, don't let this small ETF fool you. It's not. It just looks small because of the dollar amount, but it's not. I pivoted from last year. dollar cost averaging into SPLG. Now in 2025, this year, I've been dollar cost averaging into FTEC. So this is the information technology ETF. It tracks the technology sectors. So companies like Apple, Microsoft, Nvidia, Tesla, Alphabet, Meta, it tracks those types of companies and the like, AMDs and the Palantirs and things like that. Excuse me. This ETF tracks all major big boy tech stocks, but it does it in a safer way because it's in a ETF, of course, FTEC. I'm going to continue growing my shares in this position, most definitely. And this year is my year to pour into LTEC. It's a growth fund. It's really going to help the portfolio to skyrocket in growth. And those are the numbers I want to see in return. So going to continue dollar cost averaging into LTEC the entire year. And I want to see what it does for me by December. We're going to see what FTEC has for me. We're going to definitely get to freedom with FTEC. The next ETF I would like to talk about is the SCHD, the Schwab U.S. Dividend Equity ETF, closed at $28.08. Excuse me. I'm sorry, guys. I don't have my water with me right now. But here we go. I have 237.88 shares of SCHD. Market value $6,679.78. Average cost was $26.30. I'm up. Total return $423.46, or a 6.77% return. SCHD, guys, is not known for the growth, but you already know it's known for its dividends. This is the dividend paying ETF in my portfolio. Kind of helps round out the 3-fund portfolio as far as foundational, as far as growth, and now this is dividend. So SPLG takes care of my foundational, FTEC takes care of my growth, and now SCHD takes care of my dividend. This is the highest paying dividend that's in my portfolio, and most likely will continue to be the highest paying one in my portfolio. I'm going to continue growing my shares of 237. I'm going to try to get it up to 500 before the end of the year. We're going to see how that goes. Like I said, right now I'm pouring a lot into FTEC, but we're still, even though I'm pouring a lot into those, I still can't forget about my SCHD or my SPLG. Got to continue growing those positions as well for the long term. I like the dividends that SCHD gives because it also helps reinvest back into the portfolio and to continue buying more shares. And so it can continue to help build up the positions even more. You guys, I'm telling you, I think we're on a good trajectory for the year 2025. Meta is at an all-time high of $646.20. Y'all, I'll just take a look into this real quick. Look at that. Metals have a tremendous growth. At the close of business on Friday, it went up $11.05. That's 1.74% in one day. I got 2.53 shares of Meta. Market value is $1,637.76. Average cost is $509.94. And I have a total return of $345.34, or 26.72% return. I really think Meta is on the verge of a stock split this year. I'm going to be checking for this every so often this year, just to, just kind of be paying attention to the news that you hear about Meta. And Mark Zuckerberg, he got a lot of stuff going on as far as him and the support of the presidency of 47 president. So we're going to see how that affects his company. But definitely going to be keeping my eyes out on Meta. You want high growth, if you want to see your money go up fast, or if you even, how that goes. So it goes up fast, it can come down faster. But anyway, you just got to be patient. But if you want to see a good growth stock, man, Meta is definitely where it's at. So definitely going to be tracking Meta for the remainder of the year. Also, those cryptos, keep your eyes on that as well. I got $44,927.98 in the traditional IRA. I know at the close of business, we dropped some $885, and it's okay because guess what? By the time the markets open back up on tomorrow, it's going to be a bounce back. So we'll see which way the market takes, in the morning. You guys tell me in the comments below which way you think the market's going to bounce. Buying power, $2,575.28. Got some money right there on the sidelines just in case anything pops off or happens. I can buy into the dips or whatever it is I'm looking at. Okay. Total $108,188.98 right here in the Robinhood account. Also, we got another $9,700 in the Fidelity account, growing and investing as well. I hope you guys enjoyed this episode of KJD Investor. This has been an update on the portfolio. If you like what you've seen so far, comment down in the comment box below. Like, comment, subscribe, share the videos, and do all that good stuff that you know to do. This KJD Investor signing off. Peace.